Good afternoon. Good afternoon. Good afternoon. It's such an honor to have us all again at this webinar. You're all welcome. And I believe it's going to be a wonderful time once again, as usual. Thank you for finding time to join us from wherever it is you're watching us from. Good morning, good afternoon, good evening, wherever it is, because we know we've got audience from different parts of the world who usually join us. Thank you again for joining us. And I strongly believe it's going to be a wonderful time again as we'll have this webinar organized by Ubosi, Eleh and Company. It's a monthly webinar that we organize to bring up topical issues and discuss issues where we can have the privilege also to ask one or two questions and be part and parcel of the webinar itself. Thank you once again for joining. Before I introduce our guest to us, I would like to set some background rules like we usually do. You can just the privilege also to be promoted to the panelists to ask one or two questions after the interaction if you so desire. So we're going to be giving privilege to anyone want to ask question. For as many who don't want to ask their question live, you can use the chat box to ask your questions, and you can be sure that your questions will be attended to. Last month was a wonderful time, and of course, I believe this month is going to be a lot more. Last month, we had the legal practitioner who spoke to us about property and titling in Lagos, and not Lagos alone, but like titling as it is in Nigeria. But today promises to be a wonderful and a big time also. Today, we're going to be considering the topic, the role of valuations in securing bank loans and risk assessment. The role of valuation in securing bank loans and risk assessment. And I'm going to read the profile of our guest speaker. Our guest speaker is Mr. Moses Adetayo. And I'm just going to read briefly about his a few things that we need to know there. We just get right into it. Please ensure that you tell other person we've started. Call your friend to call another friend to tell another friend that, hey, we are live and it's going to be wonderful. I expect that all valuation surveyors, all valuation investors generally, and people who are interested in knowing what it is, basically, even those who also who desire to take credit from the bank and all that, just invite as many. I can see a few persons, we are already here, we're live. But please call your friends to call your friends and inform them that we're about starting. They've not lost so much, they've not um, lost any of them of the program so far. So I'm going to read the profile of our speaker, our guest speaker. Our guest speaker, like I said, is Mr. Moses Adetayo. Mr. Moses Adetayo is a seasoned business leader and a chief credit risk officer at Dillon Microfinance Bank with over a decade of experience in credit administration, internal control and audit, strategic leadership, risk management, and compliance. He has established himself as a dynamic and result-driven professional. Mr. Moses has proven track record of building and leading high-performing teams to achieve exceptional results. He is skilled in fostering key relationships and creating value for key stakeholders. Prior to his current role, Mr. Moses held various leadership positions, including head of risk management at Asion Microfinance Bank, Kobo, sorry for that pronunciation, Microfinance Bank, and Ekondon Microfinance Bank as well as acting head of internal control and audit at Calabar Microfinance Bank. Mr. Moses holds a higher national diploma in business administration from the Moshood Abiola Polytechnic Abeokuta and is a certified microfinance practitioner. He has also attended various local and international trainings to enhance the skills and knowledge, demonstrating his commitment to ongoing professional development. Ladies and gentlemen, we're privileged to have, and I'm just going to have, of course, we can see his video, Mr. Moses Adetayo, it's good to have you. You're welcome. Thank you for, doing this with us. The floor is yours. We're speaking on the role of valuation in securing bank loans and risk assessment. Over to you, Mr. Moses. You're welcome, sir.
Okay, thank you, Mr. Lusanja Fawley. I think it's a pleasure to be here, and thanks to the management of Ubosi and Co. So, I would like to start to say that it's a pleasure, you know, bringing me on board to share my insights around the topic for today. And I'm going to be pulling up the slide. Um, so, I just need a confirmation if my screen is up yet.
Yes, Mr. Moses, your screen is up. We can see
Your
your
screen is
slides.
up. Yes. Great.
Okay, that's great. That's awesome. So, we'll be looking at the role of valuations in securing bank loans and risk assessment. Good afternoon, everyone. All the participants. I know it's a pleasure to also have you here so that we can exchange knowledge. So, the question today is what is the role of valuation in securing bank loans? So, I know a lot is happening in the economy today, and people are crying out, saying there's a lot of inflation around. Businesses are not moving the way it should. So, in the midst of all of this, I would like to say that there are still opportunities. And this webinar is coming at a very much needed time where people can see opportunities in the midst of hardship, frustration, and it's good for us to leverage on some of those opportunities and information that comes to hearings. So, without any further ado, I would like to proceed to give a background. Today, I know everybody know what property is, and we want to look at how you can secure bank loan leveraging on the properties you have. Today, people have lands, people have buildings, people have motor vehicles, but I think we'll look at properties in relation to lands and building in the context of this presentation. And loan is typically accessing credit from any financial institution. So I can tell you for free that this is a well needed information. It's a well needed section for us to see various learnings and opportunities that we can harness from this. I'll start by saying that it is very important for individuals who is in fact seeking a financial assistance from a bank against their properties. Today so many people cry out loud to say that I need credits to revive my business. I need credits to enhance my business, or I don't even know how to go about it. When I approach any bank, they ask me there's a need for collateral. I don't have one. So there's a lot of insight we'll be getting today, and not just for lenders, not just about valuers, not just about expertise in the real estate. It's about every individuals. We should be able to tap from this and see how we can benefit from it. Take some lessons, see some opportunities, and we move ahead. So, in this presentation, we will be exploring how property valuation influences loan approval. We will also examine the gaps between valuers and lenders, and we will highlight strategies for effective risk assessment and loan recovery. And we'll take a look at the trend shaping property backed lending in Nigeria. I am very, very sure that you will be excited to, hear what we have for you and what we also gain from you as well. I will start by saying we need to understand what property valuation is. I have described property as a land building, and let me take a bit of what we mean by valuation. When you say you talk about valuation today, you want to speak to an estimate or the worth of something now in that context. So that is valuation. You want to estimate the worth of something. That's simply valuation. So, property valuation is a detailed assessment here of a property market value based on location, the size, the conditions, and comparable sales. I think I'll take that again. Property valuation in this context is a detailed assessment of property market value based on location, size, conditions, and comparable sales. Today, we have so many lenders who believe, or let me not even say lenders, it is known to say, it is right to say that, properties are the strong collaterals for lending. Properties are strong collaterals for lending. So, people so much have trust in properties as a collateral for their loans, but there are also, advantage and disadvantage to that. Disadvantage in terms of what the lender sees, disadvantage to the applicant who is seeking the loan. So we'll look at some of these things and we'll have a balance at the end of this presentation. So, having gotten a grasp of what property valuation is, we need to also take into considerations that there are primary method. There are primary method for assessing properties. And these are some of the reasons why there is a discrepancy today. There is a different, opinion around how people value property, most especially lenders. There is a need for us to begin to have a balanced position from the point of the valuer, who the institutions has engaged to do that for them, and why some institutions decided not to overburden their clients. So we will look at some of these perspective in the course of this section. So basically, we are saying that there are three basic primary methods. We have the sales comparison method, we have the cost approach method, and we have the income approach. Sales comparison method, as its name implies, it evaluates property by comparing it to similar properties recently sold in the same area. Now, I know it's a big word, right? To say that people present properties. Sometimes when individuals approach FIs, when I mean FIs, like financial institutions, be it deposit money bank or the MFBs, finance houses, mortgage bank. So for loans, there are challenges we have. Some institutions may decide to say we want our customer not to go through pains. At the same time, we want to make profit, reasonable profit. So people generally use their understanding, knowledge about how they perceive an environment, how they perceive a location to value properties. But there are approaches to that, and we need to also know that today. That sales, yes, you can value a property based on the fact that similar properties are being sold at a certain amount in that area, just like what we're experiencing today, where you see people clamoring for rent, there is increment in rent, in this axis. Why is rent so on a high side? Just because somebody has actually, paid for an apartment a certain amount, before you know it, the agent agent begins to, tell the landlord, don't worry, I'm going to bring somebody to you who is going to pay similar amount. So that's how some of these things come about. So the same thing happens in terms of property. A property you feel should worth certain amount can vary because that's the recent trend, in the sales of similar properties in those locations. So that's a method to valuation. Another method is the cost approach. We have this to say that this is the estimated value based on the cost to replace the property minus depreciation plus land value. I'll put it in a very simple context for us to look at. I know some of us do feel that um, there is no need for depreciation on tangible assets such as land and building. I think we need to understand that land is different from building, and that's another takeout for us. Land, yes, can appreciate, but building depreciates. So when we want to do some of these things, that's the technicality. Somebody will see a house and they will be valuing it without the engagement of a consultant or a specialist in that thing. They say houses in these areas you need to it goes for this particular amount. They do not take into consideration that the way you value the land is different from the way you value the building, the structure on it. So there are some other elements that need to come into play, just like depreciation that you need to take out on some of the structures and all of that in arriving at the valuation of a property. So that's another approach, cost approach to that. And we also have the income approach. Now, this has to do more with the commercial properties today. You know, income approach determines value of a property based on the income the property generates. That's what income approach is. Today, you see commercial buildings, structures that are not meant for, residential. How you value them varies. And I would like to, go a little deep around this. I will give an instance where we have properties pledged in the same building. For example, I would like to speak to the FIs now. This really, really centered on the FIs, where you have customers in a particular location. Let's say trade fair, for example, and here shops are sold to individuals. Shops in a plaza are sold to individuals, and these individuals are approaching you for credits. How do you value them? How do you value the shops they have pledged to you? Are you valuing a shop that is on a ground floor with that on a story building? These are the contexts that we need to look at. There are peculiarities around these things. There are gaps that we see. And valuers also need to begin to see some of these things in line with the banks. And we need to have a balance. Yes, the location, right? What about taking into consideration that that asset is a commercial property? So, the value how the value comes about is a function of not just location now, how where the property is situated on the structure for commercial properties. You need to take that into consideration. So we'll look at some of the key factors influencing property valuation. We've talked about location, we've talked about property condition. I will just need to go a little bit deep so that we can have a deep insight so that when properties are presented to us, we know what and what to look at, even the common things to look at, where we want to take a position where we don't want to leverage on maybe professionals, for example, or based on your institution's risk appetite. You say, okay, I have assessed the capacity of the customer. Let me just have an equitable interest in the property, not like I want to have a legal mortgage or yeah on the property. So we look at location, proximity to amenities, schools, transportation significantly impact this value. I will share a brief of story around experiences, and some of the things we even encounter in lending. You know, we used to. There was a particular institutions, I was engaging the staff, and we dive into how do you value, what are the challenges you face in, your commercial teams, presenting properties of customers to you. How is it valued? What approach and all of that. So we get into that conversation, and interestingly, uh, I had that there is this challenge where a customer presents a collateral, which is the property he has, and it was valued for X amount. For instance, let's say 10 million. The customer is requesting for a loan of 8 million. And during the first tenor, the loan, customer paid very well. And now, this time, he is looking up to a loan of 15 million. Meanwhile, the institution policies is that your collateral coverage must be 100% and above. Here is the thing, they have internal people who actually do the valuation for them. So there is always this compromise around how they value the property. A property that was presented 10 million, now the customer has finished paying and is coming back for a loan of 15 million. Another property valuation report came out and the property has jumped to 20 million. Interesting, right? So the question is, how 6 months ago this same property used for this credit was valued 10 million? In the space of 4 months, the same property is valued for 20 million. So the question is, what are the factors underlining the change? And that becomes a problem. Different stories that is not logical. So today we can begin to say that yes, a property that is valued 6 months ago can change. Maybe because that environment has witnessed more development. That's one. There are now roads. Government have decided to, grade the roads in that environment. There is ease of transportation to that environment. So that can affect, the valuation of the property in this context. Another one will be that, yes, 6 months ago, this property was not in the shape it was now. Then you need to substantiate that. Where is the image of the prior and what it is now? So these are the things that we need to begin to, um, imbibe, introduced. So because there are basic gaps in understanding the factors that can influence a property valuation, and these are the things that we need to know. If there's a renovation or there's a maintenance effect on a property, it can affect or influence the property valuation. So it is very, very important. It is very, very germane that we need to understand the factors influencing property valuation. We need to be able to also educate our clients to let them know that they have a good standing when they put their properties in a very, good condition. And this is what they need to do. So I want to believe that yes, if we begin to, educate our clients on some of these key things, it's going to be a positive impact. And I will talk about some of the things we can do and how we can, maintain a balance, both from the valuer, from the real estate properties. We'll dive into that in the later part of this presentation. So we talk about market strength. trends as well. So current economic conditions and real estate market dynamics influences pricing. So I would say that the law of demand and supply still applies in everything we do today. We have said that when demand is higher than supply, price of things goes up. It affects every market, including the real estate markets. So, and when supply is greater than demand, the price becomes so.
Mr. Adetayo, we lost you for a moment there. I guess the network. We lost you for a moment, Mr. Adetayo. Are you back? Sorry. I guess it's the network.
Okay,
Yes.
so
You were speaking to the market trends. Yes.
okay, so I'm trying
Yes.
to call up the screen.
All right.
Just a moment. Okay, so I hope you can see my presentation right there.
Oh, yes, 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 yes. It's now. It's.
Okay, so I was trying to explain that the law of demand and supply applies to market trend, where you have demand greater than supply, price will go up, and this cut across all things, including the real estate sector. And the same thing happens when supply is higher than demand, the prices of the items, things comes down. So today, I would like to say, is there justification or is there an opportunity in this sector, both for the lender, for the valuer, for the real estate practitioners? We'll talk about that later. So I look at the age and I'm saying these are factors, these are critical factors. I've talked about the depreciation in the earlier slide, and I said this has a role to play in terms of property valuation. So we look at the age, a property that is built 20 years ago and that which was, built 2 years ago cannot be valued the same. Even if the structures are the same, the looks alike are the same, there is a depreciation factor. The fittings, the fittings and furnitures on the structures has witnessed wear and tear. So that could affect the property valuation. So we need to take note of this. Here is the thing. Today in banking, lenders have different views. Yes, we understand the critical roles valuation plays. We want collateral to be valued, but beyond the valuation, we look at something different. So it's something that needs to be, shared with the relevant stakeholders. And I'm glad that we're having this, um, section. So there are gaps between valuers and lenders, and there is even gap between the borrower and the lender. Yes, valuer focuses on fair market value of a property. no doubt. They consider different variables, such as what we mentioned earlier, the location, the recent sales of similar properties in that location. They consider the age, they consider a lot of things in arriving at the fair market value. Meanwhile, the lender prioritizes the security of his fund that is about to extend to the client and how he can manage the risk. We need to know that in this context to a lender, I will say that valuation comes at other things. There's something we call C's of credit. There are many C's of credit, but there are commonly five. Out of these five, I used to ask a client who approach an institution who is coming for a loan for different purposes. The first thing we want to establish is, does this client has the capacity to repay? Where is the source of this repayment going to come from? I'm a civil servant, I'm a business owner, I am approaching an FI for a loan. I state the purpose for them. But the question is, how will this client repay my money? So there is a very, very big responsibility on establishing customers' capacity. So because we know that the economy, there is volatility, we will now begin to consider all the C's of the credits, where we will say, should in case what happened, like the answers happened, and this customer's business is affected, what happens? We need to take into consideration how we insure this credit. We need to do insurance for this customer. Even if insurance may not be able to cover our risk, can we have a security to this credit? Can we have a collateral to this credit? I know today there is so many misconceptions, or people mistook or misrepresent security and as collateral. No. Security is what is used to repay the loan. For example, I'll give a context. A customer is into trading and he sells drinks, for example. The security of that credit today is the drinks, is the inventory. Collateral is other things that the customer would provide should in case the security cannot pay the loan. I am a car dealer. I sell car. Car is my inventory. Sometimes people use that car itself that he sells is the inventory. The sales of that car is what will repay the loan. So saying you want to use the same car as collateral, you are wrong. So you need to have other collateral. Collateral is what if or when security cannot pay the loan, then I fall back to the collateral. And that's the thing. So what a lender is looking at is prioritizing the loan security and how he can manage his risk. Managing his risk is where the collateral comes in, is where the insurance comes in, is how he can get other things to protect the shareholders' fund. So, but today, there is a gap. So, and that gap is what we are trying to do. I have a property. The property I have is not registered. So, and the institution is telling you, bring all the collateral mix. Say, I have given you a property. I have given you a property. Do you know how much this property worth? Do you think I can run with your loan? Those are the gaps we have. Sometimes institutions don't even want to go and value the property because it lacks documentation. So what I'm also interested in this part is how can we begin to see opportunities in bridging this gap? There is a lot of properties today that lacks proper documentation, and these are opportunities. I know there are blockchains that can help resolve some of these gaps. So, but it needs to come on a larger scale. There needs to be a stakeholders meeting to see how we can, look at some of these things and improve people's financial well-being. So, another aspect I would say is there will always be discrepancies because there is a there is a dimension to our perspectives that varies. A valuer is focusing on the market value of the price. It can choose to say, this is the value of a property. This is what we sell properties in this environment. The lender will be looking at how can I realize, how quickly can I sell this property? This property is not meant to cost more than this amount. Why? Because there's a gap. There is an information the valuer is using that is not visible to the lender. For example, somebody will tell you today that yes, if Ibejuleki then, how much is a land? Aja, how much is a land? But there are other trends, there are other variables, there are other factors that has make prices of land in some of these locations, increase over time. For example, urbanization is one of those factors. The Japan syndrome, how many of us have the information or the impact that creates when people comes back during festive period into town? What are they coming back to do? Visit their family, go on a tour. So any environment that has a tourism, a tourist attributes, there will be traffic. There will be need for people to. There will be need for accommodation. So this information are available to valuers. They look at it that there is a need to, harness this opportunity, create more accommodation, create accommodation for people who are going to come in into that environment, and because of that, they are paying exorbitantly for it. So it gives more credence to that location. The lender does not have this information. The lender is looking at it that where will I get somebody who is going to pay me should in case this customer choose not to pay. So who can we use? Are there platforms where FIs can also know that yes, I don't need to stress myself. Once this property is pledged, can somebody trade this up for me in case of default? Am I going to get my money? Can the customer also get something from his asset based on the information the customer has that that property is this? So there is a need to balance that. So because of this difference in perspective, there will always be a gap between the valuers and lenders, and there will always be discrepancy in valuation. That's why institutions, if you even bring a valuation report, they will still want to take a haircut on the valuation amount, the fair market value that has been quoted on the valuation report. The organizations will want to have an haircut because at that point in time, what is in their interest is how can I get my shareholders' fund back? So I'm not interested in selling the property to make a margin. I'm only interested in trading up this property to cover the depositors fund and that of my shareholders. So these are the things that bring gaps. So how do we now close this gap? There's a need for us to communicate. It is very, very important. Communication. Platform like this, webinar like this, shaping our knowledge, give us thought on what we need to do, give us information on how we need to, refine our process and our line of thought towards properties that is being pledged or that are intended to be pledged for collaterals. There should be a channel to discuss priorities and perspective between parties. When I mean parties now, I mean stakeholders. Customer needs to be enlightened. Valuers need to understand. Madam, don't worry. Maybe you will pay the loan. Don't worry, pay the loan. Or how do we now have, when there's crisis, okay, this is the solution. This is what it will take. You have this, the institution have this, and everybody is fine. So there should be that channel, clear communication. There should be insight, data sharing, share property details, share market report, and sales data to build mutual understanding. Information should go out. People need to know why. So, and there is need for flexibility and negotiation. We need to understand that valuation is it is not a precise figure. So, in lending, you need to take that into consideration. It is just an estimation. It's a thing you have to do in case there's a default. It is not the primary reason why you are lending. So we need to also understand that. Yes, people will say that we don't really like to accept properties in lending. Reason, realization is a problem. How many property have we been able to realize? That's a challenge. People see challenges. We don't see opportunities. Why do we think properties cannot be realized? It's still information. What was the state of the property ab initio when you accepted it? What effort are you making to help the client perfect these documents? Was that the only collateral you took for the credit? So these are the dynamics. In all of this, we cannot jettison the role of valuation in credit default and loan recovery. First, loan approval decision today is themed around so many factors. You've talked about the capacity of the customer. You want to hedge risk. Should in case anything happens to this customer, what else? How do I safeguard my money? Valuation helps. It will help you determine the borrower's ability to repay and his financial health and the assets. There is a property a customer will present. It gives you comfort to know that yes, I'm in a good standing. Should in case this customer business have issues, there is a property, value this amount, I will recover my money. The customer can also revitalize his business and come back to life. It also helps you as a lender to diversify investment. We know, yes, that today, aside from the fact that we take properties as collateral, we also finance customers to upgrade their properties, and we use same properties as a collateral. And most times, some of these things that requires huge capital outlay. So, and the risk of realizing this collateral too. So it helps when you value collateral, it helps you to diversify your investment. Most of my lendings to this sector is this. I already have this outside. So let me also plug in this other part to this to ensure that your loans are adequately secured. Or sometimes you also look at the valuation and say, okay, can I have a mix? I already have my portfolio secured with properties of this magnitude. But in case of default, can I easily realize all of this? So let me have a collateral mix. Let me bring movable assets. as well alongside. And customers sometimes see that as a burden. I have given you land, I have given you property. You are asking me to bring car. It's a challenge, but these are very instrumental. Valuation in credit helps determines potential recovery value of asset in the case of default. We've seen scenarios where people who grant the loan are no longer in the system and customers' performance begins to reduce. The next thing we do is to call up the file. Maybe the portfolio was even transferred to another officer. He will need to understand the credit itself, call for the documentation, know what is pledged as collateral to take some decisions. And these are the things he will use to engage the customer. It helps the institution as well to take some strategic recovery decisions. Sometimes it helps to know whether to go for litigation or should we even sell this property. Because I can tell you sometimes institutions are frustrated with the judicial system. So let us also be on the winning side. I don't even want to go to court. Take me to court that I did not do due process before realizing this property. I have sold it, this and that. So, there is always that strategic decision. Or should we restructure our agreement with the client? So, these are the things. What we give to this customer is a loan of 10 million naira. The property in our possession is 150 million. So you will know. Should we go and sell 150 million worth of property for a loan outstanding of 5 million? So these are questions that valuation helps. Check the valuation report now. You will see the worth of the property. You will see the location. You will see everything. So I don't think we should push for litigation. I think we should call the customer and restructure. I think we should let's engage the customers. Let's see what we can do. And it gives that strategic recovery decision. It also helps in terms of negotiating recovery terms. That's what this does. Another thing I would like to say, having said all of this, there is a part for the property owners. We need to begin to let our clients know that just as we do to other assets, we should do that same for properties. You are planning or you don't even have plans, we should educate them. Prepare your property very well. It gives it a good foundation, a good valuation. A dilapidated property can never be valued like a modern one. Put in some renovations. Consider value adding improvements. There are strategic renovations that can enhance the value of your property. Just facelifting, you know, do that. And when it is revalued, you have a proper valuation. Gather relevant documents, including titles, permits, renovations, and receipts. Then you also seek professional advice. So many people don't seek professional advice. We don't consult both client institutions, they don't consult with real estate professionals to understand how to maximize their property. Thank God for the roles developers are playing these days. It's an eye opener to some communities, to some people, to some individuals as well. That a property they look at last year can change face like this. Can this land accommodate this kind of structure? These are the things that happens when you don't seek professional advice. But when you seek them, they will tell you how your property you can maximize it properly. And it can help you have a good standing in terms of securing loans from the bank. I will be, trying to round up looking at trend shaping property-backed lending in Nigeria. Today, it is no longer news that digitization has taken over the globe. Today, everything, people want convenience. People want easy access to social amenities, life and style, banking, everything. So, and this digital transformation has taken, in fact, it has altered the dynamic of real estate in Nigeria today. People from outside the country, our brothers in the diaspora, they don't need to come to see the property they want to buy. With the aid of virtual realities, you'll be at the comfort of your home. You see every nook and cranny of the properties you want to buy. These guys are making money. They want to come back home and invest in real estate. They want to come back home and enjoy good things of life. So in fact, I can tell you for free that the real estate is a market that both lenders, everybody needs to put on a searchlight and see how you can access the opportunities that are there. Digitalization is one of the trends shaping that. There is also Internet of Things today. Today, you see modern infrastructures, everything happening. Everything is happening. You, Angela, can you please turn on the AC? You see those things happening. Can you please turn on the light? Today, digitalization is shaping every aspect of man life. Every aspect. So, we also talk about government initiatives. There's a 250 billion real estate investment fund. I know, yes, government is trying to also, curb about, I read about 22 million deficit, housing deficit in Nigeria, because there is a rapid growth from rural to urban. People are migrating. The Lekki Ajah Ikorodu that you are seeing years back is highly populated. Of what age brackets? People needs accommodation. So there is a lot. There is a lot. So the government, in fact, this 2 billion, they are trying to push it to 1 trillion economy. So the government has succeeded in, raising 100 billion. I know the 150 billion is meant to come from the private sector, to drive mortgage in Nigeria. So we talk about urbanization, that's also growing so fast. We expect that to grow to 70% by 2050. Sustainable housing today, we have growing preference for energy efficient designs. It's all over. It's all over. People want today. I was in a conversation with someone and we are talking about when last. I don't think this bulb exists again because everybody is talking about solar in this recent age. They are talking about energy efficient, designs ranging from all gadgets. And because of the urbanization as well, I will say vividly that, today there are flexible financings all over. You have rent to own scheme and micro mortgages, rent to own, a lot of things. These are the things that has helped, shaping the real estate. And I can tell you that just take a look at it. Let me give this context. Most of our people in diaspora today, I can't even count people around me who usually calls, who have, pushed down money to secure lands in some estates and all of that. So it's something. I won't want to say the other side there. It's not easy to afford structures as your own land. So these guys are really, really, engaging the real estate sector. So for financial institutions, Where do we want to come in? People will come in during December. Trust me, everybody wants to, go out for tour. What's happening? I will give you, for example, Calabar Carnival. During December, flight, everything goes up because the demand is high. There is, in fact, it's entering everywhere. There are more people entering the state during that season. So that's the reason why you see today everybody wants to build a short legs, a small accommodation that can accommodate people. So who are the people? What sector is this coming from? Is it real estate? So how do you want to penetrate it from the lender's perspective, from the valuer? Where do we want to have the balance? There is a recapitalization that happened recently in the commercial banks, and I can tell you for free, so many banks as share of the share capital. Where are these funds going to go to? So the opportunities are there. How do you want to make from it? How do you want to make from it as a financial institution? How do you want to make from it as an individual? Do you stand a chance to access a bank loan? So these are the opportunities we need to take. These are the lessons that we need to learn and see how we can improve our living. There is a lot happening in this sector. Today, everybody wants to have own their own house. You want to own it. You don't want to continue to rent because day by day rent is increasing. Thank God for the Lagos State House of Assembly looking into the recent hike in rent and all of that. I'm still looking forward to where the resolutions that will come out from that. So with this, I would say that our key takeaway here is that valuation is very critical. um, we need to bridge the gap, as we have mentioned, between all stakeholders, not just the lenders and valuers. Customers need to also understand both perspectives. So we need to also prepare effectively as a property owner to make us stand, very well in terms of lending to FIs. So, and we also need to adapt to trends. We need to stay informed about the emerging trends in property-backed lending to navigate the changing landscape successfully. Thank you very much. Thank you very much.
Wow. Thank you so very much, Mr. Detayo. That's quite a whole lot, and a whole lot, I'll say. And I know I'm aware Mr. Detail is going to be going to another meeting, and we don't have to bore him too much. But I mean, please just I will try and keep this very short and simple so that we can allow you to. Thank you very much once again for doing this with us. Out of your very busy schedule, you've been able to share this insight and, like I said, quite a whole lot. Before I engage Mr. Adetayo, maybe we just give another 10 minutes so that we can wrap up and allow him to take what he has to do. Please, maybe we'll just give, if there's anyone who has question or you want to ask your question, if you're not using the chat box, we can allow one and maximum of two persons if you want to ask questions live directly. So please you can just signify by the raise of your hand, and I'm going to get them at the back end to promote you so that you can ask your question. Hopefully we have, but if we don't have, fine, we're just going to have this talking engagement and wrap it up so that we can allow Mr. Adetayo. Once again, Mr. Adetayo, thank you very much. I want to, based on the conversation, now I realize that this issue of the gaps between the valuers, I mean the value and the valuers that the value that you have in a valuation report and the lender, it's something that is very, very critical to you. And I hear you talk about capacity to pay and much more in this time around, you not just the collateral, but the ability of those clients to pay. I want to say, how do we, because you talked about bridging the gap, from the valuer's perspective, there are probably some information that the valuer does not have, right? The valuer maybe just the instruction is to go value
Yeah.
for mortgage purpose, and he does his valuation, he submits his report to you, and that's it. But at the end of the day, maybe the valuation does not work, it does not satisfy the client, it does not satisfy the bank. At the end of the day, the credit was not granted to the lender. I want to ask, when you see a valuation report from your own perspective, what are the immediate things that you look at beyond the values that are pendant to them? What are the major things? What are the things that are appealing to you from this valuation report that you see day in and day out?
Okay, so thank you, Mr. Ford. So I would say that there are so many things FIs can look at. So beyond the valuation report, valuation report gives us a clearer picture about where the properties is located, the value of the property, and the owners of the property. So beyond that, institutions sometimes do other consideration in terms of where the property is located first. What are the things surrounding the realization of this property in case of default? You see, there are some properties sometimes that you can't realize because of the peculiarity of the environment. So sometimes when loan applications are declined, it's not because the application is faulty or the valuation is faulty. It's because the organization may not be willing to take the risk. You understand? Capacity, yes, might be established to a certain extent. Meanwhile, maybe the major consideration for that request is the collateral. But unfortunately, the collateral is also situated in a location where it's not easy to realize. You can't even go for recovery there. You understand? So those are some of the challenges we have. So coming to bridge the gap is just to say that these are some of the information that both the valuer, the borrower, everybody needs to know
Mm.
so that we don't get disappointed at any point in time.
Mm. Thank you, Mr. Moses. Thank you very much. Please, Angela, can you promote? I can see, okay, this hand is already down. I think I saw a hand earlier on, but I think it's down. One person was asking about the slides. Yes, we are going to send you the slide. So long we have all of your emails, we're going to send that slide. Okay, so I'm very considerate because I know Mr. Detayo has to leave. Thank you very much for that. I will also now say, just a follow up to that question where you talked about from the most times, not necessarily because the valuation itself is faulty or that the
Yeah.
lender itself has a problem, but most times from your own assessment, you discover that this may not be realizable. Now, the other question, or what I also wanted to speak to, is to talk about this market trends. Would you, as a lender who works in the banking in this sector, would you, as the banker, what other things would you love to see in the report other than, yes, the valuation, the figures that will put, the methodology that was used in valuing? What other things would you like to see or would you expect to see that will boost your confidence, so to say, with regards to helping the lender and as well as the valuation report? I hope you get me.
Yeah. So fantastic. So some things are missing from valuation report and it's information. See, beyond the fact that you are giving us the valuers is giving the institutions details of the property, they need to let the FIs knows that that property is in a very good standing, that the customer for once will not even want to lose because of certain factors. For example, a land situated at Lekki, you understand, is within a tourist environment. So Ikoyi and the like. So these are information that gives comfort. You understand? To borrower to say is not, even this customer will not even want to trade this off. So he will want to pay because that environment is a milk where everybody wants to suck from.
Mm.
So
All
this
right.
information is very key. Give us some of the other trends that will make that property, you know, want to be domiciled with the FI and give them comfort
Mm.
other than just the report. Thank you.
All right, thank you, Mr. Adetayo. Let's look at one or two more talking point. I'm trying to see if there's any other question, if there's any, okay, if there's any question here. Okay, I mean, it's basically people are saying thank you and also wanted the documents. Yes, we're going to share that document with you. Um, let's go to the issue when you were trying to give your takeaways. You talked about how valuation is critical and the need for us as valuers and as the bankers to bridge the gap, how we need to also prepare effectively, and the need for us to adapt to trend. If I may ask you, based on where you sit and the nature of the lending that you see, what do you think is happening in our economy? Yes, you've given the prospect that things are looking good. There are a lot of opportunities, but do you honestly, in the light of the current state of the economy, the interest rates and all that, do you really think, or do you really see the FIs doing more of lending, and as such, the need for these valuations?
Yes, sincerely speaking, information is power. So I would say, Mr. Forwardly, that yes, there is. Just I mentioned the fact that there's a recapitalization going on in the commercial bank, the DMB. So there is a pool of fund there, and people want to lend. You understand? Where will some of these funds goes to? Probably real estate, right? So everybody wants to. The challenge is yes, interest rate is high because the source of fund. I explained that real estate today requires a lot of capital outlay, right? And for survival of some of these institutions, FIs have different sectors. We have the MFB, we have the financiers, we have the DMB. So not everybody may want to play. It depends
Mm,
on their liquidity. You understand? It depends on
mm,
their liquidity. It depends on the partnership arrangement they have with some of these real estate companies and structural terms. But for me, as an individual, I see a lot happening there. You understand? And I also understood some of the gap which I shared during this section and see how we can even come, bridge the gap. See how we can even, leverage on this information and see how we can. I mentioned the fact that yes, the federal government is also driving some initiative in this perspective because
mm,
there's a housing deficit gap that has been noted. You understand?
mm,
So these are opportunities that we
mm,
can harness. Individually, yes, but institutions will need to look at their liquidity position to see if it's something they want to, go into. But there is a lot happening this year. There's a lot happening that I feel people should tap into.
mm. Thank you very much, Mr. Moses. One more thing before I allow you to go. I mean, sorry, just pardon us. I know you're doing this out of your very, thank you once again. Honestly, this is really appreciated. One more thing, I want to pick from your earlier the discussion. You talked about documentation. Luckily for us, in our last webinar, this was a topic. I mean, we brought in a legal practitioner who would discuss this. And you also mentioned something about the need for, when you were talking about the gaps between the values and the lenders, the capacity to repay. You talked about documentation, which is basically the titling. I want to ask from the FIs, why is it, and I know these are some of the challenges maybe from the valuer's perspective too, because most of the valuations that are being done at times, not all the times, do you have all the necessary information with regards to the valuation. Number one, you are just assigned to say, okay, do this valuation. Yes, you ask those questions, but and again, I say this because I've also had interaction with a lot of bankers like yourself. Every valuation report, they need it like yesterday, right? When they call for valuation, they need the report just like yesterday and all that. And in that discussion, you ask for the title documents and all that. Most of the times, you're not presented with some of this documentation. How do you now begin to think that for us, the FIs, the valuers, FIs begin to partner together to ensure that every documentation that is needed to ensure that property is well valued, right, in terms of information. Because you mentioned also earlier on, said you need more of information, more of information. When the title that presented, you're able to state that this is the title, the unexpired time, you're able to state it there in the report. It also guides you with the valuation that you're doing. So this issue of typing and documentation, how do you think, what do you think we can do better, both from your own end and our own end? That's one leg of the question. And the second leg of the question is going to be, what can we do to ensure that in ensuring that proper valuation is being done? This issue of you need the report like yesterday. I mean, it's urgent. It's, how do we balance this gap? Because these are also gaps. And I think because you spoke well about gaps, and I think the need for us to begin to balance out these gaps are very important. So how do you balance out these gaps? Those are the two questions I'll leave you up to so that so that we'll wrap up and allow you to do other things. Did you get the question, sir? Hello, Mr. Moses. Oh, I think there's something wrong with. Hello, Mr. Moses, can you hear me?
Yeah, can you hear me now?
Yes, I can hear you. Did you get all my questions or do I come again?
Okay. No. I think I get the
Okay,
chunk part of it. So,
okay.
Mr. Forward,
The network is breaking. We are losing you, sir. We're losing
I
you
must
gradually.
be.
We are losing you, sir. We can't hear you now. Can you please try and
Okay, can you
network?
hear me now?
Better now. You have to start all over, sir.
Okay, so I'm saying that it's a major conversation within relevant stakeholders. See, we want to do business as FIs, right? And we want to have a strong position. So I talked about how we need to go about some of these things because the customer is the primary key player here. Sometimes we will say that knowledge is power. Some of them do not even know that this thing is necessary. You understand? Another thing is, wow.
The network is bad from, okay, can you come again,
Okay,
sir?
okay. Can you?
Yes, it's better
Okay,
now.
so can you hear me now?
Yes, sir, it's better now, sir.
Okay, so I'm saying that there is about the stakeholders coming together to know where everybody has a role to play. The customer does not even. Hello, can you hear me?
Yes, I can hear you, sir.
Wow.
Yes,
Can you
I
hear
can hear you.
me?
Yes, I can,
Sorry, I
sir. I
think
can, sir.
that's a connectivity issue. So, okay. So I'm saying that this has to do with all the stakeholders coming together to understand their part and just about bridging the gap. The customers need to know that having all documentation in place, you understand, gives him or her a right standing to access credits, having all documentation in place. So the question is, some complaints about the fund, the cost of doing some of these things. So bridging the gap is also stakeholders coming to have that arrangement. Just like so many factors you consider in valuation. We can say, okay, give us this status report within this timeline just to enable us proceed. Then we expect this. You understand? These are conversations that needs to happen among stakeholders. The customer itself, today, everybody just want to learn. You just want to learn. You just want to learn. Customer is also telling you that I need this money like yesterday.
Yesterday.
These are the things that needs to happen because
Mm,
everybody wants to protect himself. So these
mm,
are the is a conversation that need to happen, and we devise a means where every player knows what to do. You understand?
mm,
It's
mm,
a partnership. Customer, are you willing to do? This is the cost. It's not just because you want to access credit. Tomorrow you may want to even dispose the house.
mm, mm,
So valuation will give you what? The title documentation. The documentation will give you more valuation. You
mm.
understand? So these are the things that needs to be taken to the forefront of all the stakeholders so that you know the benefit of this. But customer is only interested. I need your loan. I will repay you, not my property. You
Yeah,
understand? So
yeah.
you cannot delay. The bank is looking at it that we know anything can happen too. What do we stand to? How do we intend to get back our funds? So these are the things. So the pressure comes from that circle. So it's still a round table discussion. It
Mm,
comes
mm. Mm. I think the network, we're just lost. I think we're losing. Okay. Yeah, I think you already about to wrap up your thoughts. Again, as much as towards the ending, the connectivity was a problem. Thank you once again, Mr. Tayo Adetayo. It's been a wonderful time engaging, and I'm sure we definitely have to do this again because these are critical things, and there are so many issues that you raised from these presentations that we need to look at. I was particularly fascinated when you were talking about the trends that were shaping the property. Yes, the property the lending in property, shipping property and lending in Nigeria. Talked about digital transformation, government initiatives, urbanization. These are things that I think as stakeholders we need to talk about them because there are quite a lot of opportunities for us, both from the perspective of the FIs, the valuers, the investors, and the real estate practitioners. Mr. Adetayo Moses, thank you once again. It's been a wonderful time engaging with you. It's been a wonderful time having this presentation. And honestly, I need to speak with my team. We need to get you back at some point for us to delve a lot more deeper into some of these things and so that we can be better off as valuers. Once again, I want to thank everyone who have been able to join us for the presentation. I've got a few person that sent message to say big thank you, Mr. Tayo, for the presentation. Everybody had appreciated your presentation and asking for the slides. Yes, as usual, we're going to make the presentation available for as many who are sending, who will have the email address. So you can look at them and you can, if there are any questions that you probably want us to ask, that you want us to respond to, feel free to send us mail with regards to those questions, and you can be sure that you're going to get a response from us. Once again, I want to thank you all for coming. Mr. Adetayo, thank you so much for doing this for all with us. In spite of your busy schedule, we thank you and we appreciate you greatly, and we look forward to having you some other time. To all the listeners, and for those who are going to be listening to the replay from our YouTube channels, please do well to like the YouTube channels, do well to listen to this presentation all over, and you can reach back to us. And I'm sure that it's going to be a wonderful time. We look forward to having you all again. The next edition of our webinar will be in the month of May. So please prepare yourself, get ready. And the topic will be coming to us, in the coming weeks, so that we can all prepare to have another wonderful edition of Real Estate Today presented to you by Ubosi, Eleh and Co. Once again, thank you all. My name is Olusanjo Fawale. I've been your host, and I look forward to seeing you some other time. Thank you for coming, and thank you for having a wonderful time with us. At this juncture, this webinar is brought to a close. We thank you all and look forward to seeing you some other time. God bless you, and have a wonderful afternoon.